10 years ago, I was a barista at Starbucks making coffee. I was making about $150 a week after taxes. I would take $50, use that to take my girlfriend to the movies. Long story short, she broke up with me to be with a rich guy. At that moment, I knew that I wanted to get rich to get back at her. So I looked up the fastest ways to make money in America, real estate and the stock market. So my first year, I lost money. And then by my second year, I discovered something called short selling, which is making money when stocks go down. So my thought process was, all right, if every time I buy a stock, it goes down, instead of hitting the buy button, let me just hit the short button and I'll be rich. My niche is finding the worst companies in the world and betting that they go lower. Warren Buffett finds the best companies in the world and bets that they go higher. I find the worst companies in the world and bet that they go lower.
The DJT trade you just made 400K on literally a week ago. Is that the largest P&L on a single trade you've done, or you've done?
No, probably the largest would be AMC, which is about 700,000 a day. The way that I think about trading is if you can do it right, you can make more than a doctor, lawyer, and engineer combined. To be able to make more money than these people, you have to be at least willing to invest a couple of years into it. So for me, my mindset is it is a long game. Problem is, doctor goes to school for 8 years, lawyer goes to school for 5 years, engineer goes to school for 4 or 5 years. But if executed properly, we were talking about it earlier, I made a surgeon's salary in 1 day. For me, when I was at SMB Capital, one of the best traders there, a guy that was making, multi 7 figures, probably an 8-figure trader now, to be honest. But what I saw him do was very, very simple, and it's gonna sound crazy, but here it is.
The number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you.
Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029, when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, Forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percents, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode. Let's take a break for a minute there, guys, because I want to let you know about one of our sponsors. Alpha Futures is offering the best one-step evaluations in the industry. And in the month of December, they have no activation fees. They have the largest end-of-day based drawdowns in the entire industry, with up to 90% profit split and lightning fast payout speeds, and offering advanced and standard accounts to fit your needs. Alpha Futures is truly offering the most elite plans for the lowest total cost to entry in the industry. You can start as low as $79. And thanks to the podcast, using code RIZ, R-I-Z, you can get 20% off any of those challenges. Go to the link in the description below, and let's get back to the episode. Welcome everyone back to the Words of Rizdom podcast. We are still the number one trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests, talking of which our guests are verified traders, people who really do this at the highest level in the world. And today's guest, funnily enough, we did record an episode a few months back in New York, and unfortunately that footage got corrupted. So now we're both in Dubai. Thankfully, we managed to align. And this trader went from a Starbucks barista to a full-time trader who has made officially, up until the end of 2023, $8.7 million, closing in on that $10 million mark. He's not officially a good trader until he hits 10 million. Some people say that. I don't know. I don't agree with that. But it's the one and only Alex Temiz. Did I say that right?
Yes, sir.
I forgot to ask you before we started.
No, you're good. You're good.
Thank you, Alex, man. I really appreciate you doing this. I know it's your honeymoon right now, so big congratulations to you.
Thank you.
And apologize to your wife if she sees this. I don't know, but thank you for doing this. I really appreciate it.
My pleasure. Thanks for having me on.
It's my pleasure. I know last time, just before we get into it, last time you did bring me a gift, so I'm apologizing in advance that we had to re-record this because it's never a nice thing. But that gift was amazing. It sits right now in my daughter's room to bring her luck. I'm going to move it. I'm going to take it out of there once our studio is built and put it in there. But really appreciate that. How we like to start off, as I'm sure you're aware, and we've already done this once before. So, but we'll just go into the backstory very briefly. As I mentioned there, you were a Starbucks barista, but now you're closing in on $10 million in trading profits. That's a crazy two polar opposites, I would say, almost. What does that journey look like? Like, why did you get into trading in the first place?
Yeah, so about 10 years ago, it's crazy to say, but I'm actually closing up on 11 years, but 10 years ago, I was a barista at Starbucks making coffee. And, I was making about $150 a week after taxes. I would take, $50, use that to take my girlfriend to the movies, another $50 to pay for gas, because gas was expensive at the time, and the other $50 I would just keep in my bank account. Long story short, she broke up with me to be with a rich guy, and that really hurt me. At that moment, I knew that I wanted to get rich to get back at her. So I looked up the fastest ways to make money in America: real estate and the stock market. Real estate has such a high barrier to entry, meaning that you need a lot of money to get started. But with the stock market, you could open up an account with as little as $500. So that's what I did. And as soon as I opened my account, like I said before, I had a magical, mystical talent. Every single time I bought a stock, it would go straight down every single time. So my first year, I lost money. And then by my second year, I discovered something called short selling, which is making money when stocks go down. So my thought process was, all right, if every time I buy a stock, it goes down, instead of hitting the buy button, let me just hit the short button and I'll be rich. So my first short trade ever, I shorted 2,000 shares of a stock called VGGL. Doesn't even trade anymore, it's delisted. And within 5 minutes, the stock went down 50 cents a share. I made $1,000 and I was hooked ever since. So then by my third year trading, I finally started to make money. So first year, lost money. Second year, shorting, broke even. Third year, started to make money.
Incredible. And as you say, it's a very interesting starting point, right? Barista at Starbucks, had your girlfriend, she left you for a richer guy. And that was the spark that gave you that drive. Which is interesting, though, because you see people go the other way as well, where they let something like that really get to them, really make them question themselves, really just kind of hold themselves back, versus, as you did, you chose to use that as a fuel to push you to level up, essentially.
Yeah.
In that moment, though, trading is very difficult. Did you know how difficult it was before getting into it? Or was it more so a case of, like, I need to get rich? There's two options here. One is a high barrier to entry. One is much lower. I'm just going to go for that one. Yeah.
So I went for the lower barrier to entry because I didn't know any better. I thought that the only way to get involved in the stock market was to buy stocks and hold it like Warren Buffett. And after 30 years, maybe you're going to make $100,000. So I didn't know. And then one of my friends mentioned there's something called day trading, where you could be in and out of a stock in like a minute or 2 minutes. I'm like, what are you talking about? I just thought you hold and like that's how you make money. No, that's not what you do. So back then, my friend didn't know any more than me, but he knew about a different niche called day trading. So that's kind of how I got involved there. But I didn't think that, it was going to be a fast-paced, difficult, stress-intensive environment. I really just didn't know better, because back at that time, I was, 19 years old, 18 years old. So I didn't know what it was like to actually be in a world where, it's not waiting to make money. You could just instant gratification. I didn't know that existed, but lo and behold, that's what happened.
In terms of the time horizon, as you said, like originally you thought you had to invest and then just hold for a long period of time. So was your thought process like, I'm going to get rich over the long term? Or were you still trying to think, okay, this will be the way I'll get rich and I need to do it sooner?
No, my thought process was, as long as I'm rich, I don't care how long it takes, right? But I never expected me to be that guy that makes $100,000 in a day. I never expected to be that guy that makes even $10,000 in a day. I thought that same thing. Do what Warren Buffett does. Invest in good companies, hold for dividends, and that's it. But every time I bought, shit will go straight down.
What allowed you to sort of overcome that? I know obviously you learned about day trading and then obviously short selling as well. But when that was happening in that first year where you were just buying and it was going against you, was there any doubts in your mind? Was there ever any thoughts of like, okay, maybe this isn't for me, or this is just this? A lot of people even say, which is really weird, just about the market, forget like courses or anything like that, but like just about the market, it'd be like, this thing's a scam. This thing knows when I'm getting in, it's going opposite to me. This obviously doesn't work. Did you ever have any of those thoughts at all?
Well, kind of. So my dad had a lot of money invested in his retirement fund. And when 2008 happened and the entire market crashed, he lost a lot of money. So in his mind, he's like, the entire market's a scam.
Interesting.
He had like Netflix at like $60, $70. It's at $700 now. He had Facebook, very low, less than $100. Now it's $600. So had he just held, he would have had a lot of money. But back then, you thought the entire world was crashing. So my dad was very, very skeptical. He said, you're going to lose money, you're going to lose money, you're going to lose money. But in his mind, he's a Middle Eastern dad. So he's like, let him learn through losses. Let him learn through lessons. Let him be christened by the fire. And thankfully, by him doing that, it kind of motivated me too to keep pushing. Also, for me, when I first started to get involved in the market, I was actually very interested because I saw the movies with the fancy cars, the nice suits, the good whiskey, the nice steaks. And I was like, this is the life I want to have for me. So not only was it a matter of wanting that life, it was also, I became very passionate about the market. I wanted to learn about the market. It's like, if you're a car guy, you want to learn more about cars, just learn about it. For me, when I got involved in the market, I just wanted to learn and learn and learn. So for me, it was very easy to just keep persevering and keep pushing because it was actually a passion of mine. Rather than at night watching Netflix or watching YouTube, I was trying to watch trading videos. I was trying to educate myself on how to become a better trader because that became my drug. My drug was, how do I get better at this? Because I know that it exists. I know that people make it. And I was just really interested in the market. So even to this day, 10 years later, I'm still watching videos. Like right now, I know a trader that we talked about is Lance Brightstein. I watch his content. I watch his monthly recap videos because now there's a trader that's better than me. It doesn't matter how much money I've made. He's made a lot more than me. So I'm always trying to learn. I'm always trying to get better. Even at this level, I'm still trying to get better. And I think that's what really separates the good traders from the great traders is they never stop learning. It doesn't matter if I make 100,000, a million, 8 million, whatever it is. I'm always trying to get better, not so much so as competition, but I just want to see how good I can get. And I want to see I'm so passionate about learning new things that it only benefits me.
It's a very interesting point you bring up there. Like I'll throw two questions at you, which I don't normally do. So we're going to try do something new. But that experience though, that mindset of always learning, was that something you always had, or was that something you sort of developed along the journey? And then secondly, as you already mentioned, the thing that separates the great traders and the good traders, I would even say the bad and the good as well, in terms of, I think a lot of traders have this false expectation that once they develop a strategy or watch enough videos, they've got it and they're profitable, that's it.
Yeah.
Right? And most people don't even reach that profitability because they don't even follow through with that thought process of actually watching the videos consistently. And the ones who do might get to profitability and then stop and then wonder why their edge goes or why their performance goes down the toilet as well after a period of time because they haven't kept the work going. So how important is that in terms of that consistency? And then as I said, was that something you always had or was that something you developed over time?
Yeah, it's a great question. I think to start off, I think so long as you're passionate about something, it's very easy to be obsessed with it. Very, very easy. So for me, I was passionate about getting back at her. I was passionate about making money, and I was passionate about the markets. I wanted to learn how the markets worked. How are these hedge funds able to make so much money? How is this process able to essentially use money to make more money out, right? So for me, I became obsessed with that entire idea of the market. So because I was passionate, it was very easy to learn. It's like about anything you're passionate, whether it's watches, whether it's cars, whether it's anything, if you're passionate about it, it's very easy to continue to be obsessed with it. So I was passionate and that's what made me obsessed. So I think I would say I have an addictive personality. So whenever I'm interested in something, I'm all in. At that time, the market, I was all in. And even to this day, I'm all into the market. Now, for the second question, I think what people need to understand is the market's always changing. What worked in 2020 does not work in 2021, does not work in 2022. What worked in 2022 is not working in 2021. What works in 2024 is not working in 2023. What worked 3 months ago is not working today, right? So what I think people need to understand is the market is always changing. So if you're sticking to the same strategies that you used in 2020, 2021, you would have probably lost all of your money now because at that time, you just buy anything and it shoots up. 2 years later, you buy anything, it goes straight down. Now we're in kind of like a different type of cycle where the semiconductors are going crazy. You have bonds, all these things going, crypto, Bitcoin, like as we're recording this, Bitcoin's at an all-time high, right? So I think that people don't understand that if you're not changing and adapting with the market, your strategy is going to be useless. So I'm always trying to learn. I'm always trying to push. I'm always trying to see what's working now, because if it's working now, it might not work for long. You have to capitalize while that opportunity is there, because you don't know how long it's going to be there. And by the time, with enough time, that strategy or that process might be gone.
Do you feel like that's where a big issue lies with when it comes to a lot of retail traders out there, that they're constantly looking for that one strategy that's going to make them millions, the one strategy that allows them to have ultra confidence in the markets? And the problem is there might be a strategy like that, but they don't realize it has a time expiration. Like there will be a certain period of time where it works, and then they'll need to adapt and they'll need to change. And therefore, it doesn't really exist, that idea they have in their mind of like, one day I will learn a strategy or I'll come across a strategy where I'll just be set for life. Done. I've learned that. That's it. I can know the markets. I'll trade it for the next 20 years, retire. Everyone's happy. But equally as well, in terms of that, do you feel like a lot of people, when it comes to strategies, they're not willing to adapt and they get kind of fearful about adapting and making changes, when really it's something that should just be embraced and understood that that's the reality of trading?
Yeah. I think a lot of traders are lazy. I think a lot of people treat trading as gambling. I think a lot of retail traders are not serious about trading. I think a lot of people come in with get rich quick. I want to buy this 2-cent penny stock, and if it goes to $2, I'm going to retire. I'm going to buy myself a BMW, and that's it, right? But what the reality is that the reason why 90% of traders lose is because they don't take it seriously. So when I kind of went all into the market, I treated it as a business. I treated it like a job. I wasn't just waking up at 9:25 and hitting a couple buttons and being done. I would wake up early. I would look at the news. I would look at the filings. I would look at the chart. I would make it as methodical of a process as possible, something that's very, very repeatable. That way, I know I'm able to show up and make money consistently. So I think a lot of these retail traders, they don't think or they don't know any better that the market is changing. They don't know that they should be changing their strategy. They don't know that they should be adapting, because a lot of the information out there is kind of BS, right? So a lot of people, what they do is you join a course, you join a community, and they're teaching you the strategies that worked 10 years ago. But you don't know as a new trader that those strategies are irrelevant now. And what ends up happening is you think that you're the problem, not the strategy. So I think a lot of people need to understand that the market is ever changing, ever evolving. Every moment of every day, something could happen. So as a new trader, you have to be willing to not only expand your playbook, but also be able to understand that there's traders that are better than you, that are making a lot more money than you. And if you could take a little piece from here, a little piece from there, and mold it into your own personality and your own strategy, that's the key.
Definitely. No, I love that. In terms of that, let's sort of on that topic, what was that learning journey for you early on, like very early on? Like, what was that learning experience for you? Was there any sort of resources? Was it free resources? Because we're talking about 10 years ago now.
Yeah.
So I can imagine that there was probably a bit more limited in terms of what was available online compared to today. So what was that like for you, that part of the journey?
Yeah, so I mean, I could count the educational services on my finger back then, right? There was really no one out there. But I think as social media, as Instagram, as TikTok started to evolve, a lot of these gurus started to evolve as well. But back then, the honest truth is I had to lose money to figure it out.
Really?
Right? I had to lose money, because it's actually funny that during my first year trading, when I just kept losing money and losing money and losing money, it was very discouraging, because I was like, fuck, I'm running out of money. What do I do? So I said, if I want to do this for real, I have to treat it like a business. So I gave myself one last chance, and I sold the rims off my car for $2,000, and I used that as the final amount from my account. And I said, if I lose this money, I'm quitting forever. So by having a little bit of skin in the game, it finally gave me the opportunity to start treating it more like a business. So for me, losing money was really, really annoying. There was a couple of chat rooms I was part of, a couple of YouTube videos, a couple of everything, but the moment really changed when I went to a conference in Las Vegas. So I went to this conference and I was 21 years old, and I just came off one of my biggest trades at the time, stock called CLTX, which also doesn't trade anymore. I made, I think it was like $60,000 in one day, which was the most amount of money I've ever made at that point.
21, right?
Yeah, I was young. So 21, and I went to my dad and I was like, hey, there's this traders conference in Las Vegas. Like, I want to go. And I was like, what traders conference are you talking about? This is a scam. Like, they're going to probably try to take your money, this and that. I was like, no. Like, I had this really big trade and I was invited here. Like, let's just go. And he's like, listen, if you want to be scammed, I'm going to come with you and show you that this is going to be a scam. I was like, great. So me and my dad went to Las Vegas, went to the trading conference, and it was a good conference. And there was one guy that really stood out to me. He was like this Asian dude that was laughing, giggling all this time. And he posted a profit calendar on the screen. And he had 3 losing days in the entire year.
Wow.
And he was averaging like sometimes 100,000, 200,000, 300,000 a week. So my dad's like, wow, this guy is like legit. This guy knows what he's talking about. Like, maybe this trading thing is real. So I went up to him. His name is Val. And I was like, hey, like, I really appreciate the stuff you put on Twitter. Your speech was like really, really awesome, really amazing. Like, I just want to say thank you. And he's like, yeah, sure, kid. Like, whatever. So long story short, after the conference, we kept in touch. We became friends. He was going through a divorce at the time. So I was there to kind of like help him through that. He was very good at technical analysis, which is a study of charts. I was very good at fundamental analysis, which is company filings. So his strength was my weakness. My strength was his weakness. Brought together, started talking. And through that whole experience, he started to mentor me, teach me, show me how to get better, taught me some strategy, like the first red day, which is something that I use till this day. And then fast forward a couple of years, we got together and we started MIC.
So you two run that together?
So me and Bao run it together, yeah.
Wow. I don't think I remember that from last time. That's incredible. Yeah, that's great. That's amazing, because it's very rare to be able to find yourself in that opportunity, especially that long ago, when there weren't that many people around. So to be able to sort of build that sort of connection, especially in trading, which is very lonely, and a lot of people, especially nowadays, still have that loneliness, which is surprising considering the amount of communities and the amount of availability when it comes to having access to traders. Of course, the difficulty of then sort of filtering those traders becomes the thing, but you'd be surprised how many people still find this a very, very, very lonely game. So it's always amazing to hear when you see traders get together and sort of build those relationships. But what I found interesting there in particular was the fact that one was technical, one was fundamental, but you were able to bring that together and sort of have that synergy, which is kind of interesting as well, because one thing I've started to pick up on is that there are so many different ways of trading, and sometimes I wouldn't call them trading teams, but when you have like SMB Capital, which I'm sure we'll get onto, but like I was listening to a podcast that they were doing, and they were talking about how they have like the senior traders, and then they have junior traders who just generate ideas for the senior traders. Yeah. And I found that fascinating, because though it may be obvious to a lot of people, for me, I was like, oh, I've never really heard of that concept. You just think everyone trades. Like anyone who's looking at the markets, they'll just be trading themselves, but generating ideas. So like, for example, did you and Val do something similar where he may have a technical view and you're providing like the fundamentals, or vice versa?
Correct. Yeah. So that's definitely part of it. But the most important thing was this. So if there was a stock moving and we made a plan on it, if he wanted to trade it, but I didn't want to trade it, we would use less size. If I wanted to trade it, he didn't want to trade it, we would use less size. If we both agree that we both should trade it, that's when we knew to size up. So we would kind of use each other as a checks and balances system, because maybe he saw something that I didn't, maybe I saw something that he didn't. But if we saw the same thing, chances are we're both right and to go in heavier. So that was something that we did for a very, very long time, is kind of checking each other to make sure that we were on the same page. And depending on that check would dictate how much size we would use on the setup.
That's incredible, because it kind of leads into a very interesting topic in terms of dynamic risk and fixed risk. And I know that I've heard you say before, like a mistake that a lot of traders make is that they just stick to the same position sizing on all their trades, which will lead us into another topic, I'm sure, as well. But like, what are your thoughts on that in terms of dynamic? So even in that example there, you're using dynamic essentially, where you're sized down when they're not aligned, but when you're aligned, you're sizing up. How pivotal has that been to sort of your trading success and the sort of P&L that you've been seeing over the years?
Oh man, it's everything. So I'm going to give you an analogy. This is my favorite thing to do. So let's say we're making a bet, and the way that you win the bet is if Bao, my mentor, gets drunk. So if he gets drunk, you win the bet. I'm going to give you 2 examples. Bao goes to Disney World. If Bao goes to Disney World, there's probably like a 50% chance he's going to get drunk. But if Bao goes to the club and there's a couple Asian girls with short skirts on and a bottle of Hennessy, it's probably a 99% chance he gets drunk. So in which scenario are you going to bet heavy on? The 50% chance that he's going to Disney World, or the 90% chance that he's going to the club? the club. So whenever you see that bow at the club example, you want to go in heavy, heavy, heavy because the odds are in your favor. So being able to determine what type of setup you have, the Disney World setup or the club setup, will help you determine how much size to have based on the percentage of win rate on that setup. So for me, I am waiting for those bow at the club setups because I know that with high probability, there's a 90% chance I'm going to make money. I want to add and short as much size as possible because the odds are in my favor. Whereas over here, I may not want to use as much size because the odds are not so much in my favor. So that's the way that I try to think about it is like, are the odds in my favor? What is the grade of the setup? And based on the win rate of that setup, how heavy should I go?
Off the back of that leads into a very interesting question that a lot of people, I think some people struggle with in terms of the concept of A+, A, B setups. Like the main argument that people try and make, because the very interesting thing is when it comes to dynamic and fixed risk, majority of the time, the fixed risk side is all the retail traders. And then when I speak to more professional traders or people who have sort of got a verified, very high P&L, such as yourself, such as Lance, such as Umar Ashraf, for example, same thing. The same element of dynamic and grading your setups. So knowing when to size up and when to size down. And yet the response a lot of the time is like, oh, well, if you have an A+ setup, why don't you just take the A+ setup all the time? Why bother with the B? Why bother with the A?
Sure.
Just A+. What are your thoughts on that when you hear that sort of feedback?
Yeah, a couple things. Number one is,
let's take a break for a minute there, guys, because I want to tell you about one of our sponsors, Alpha Capital. Now, without our sponsors, it's not possible for us to host such incredible podcasts around the world and get the level of guests that we are getting. So again, thanks to Alpha Capital for sponsoring the podcast. Now, Alpha Capital is one of the best prop firms in the industry. So far, this year alone, they have done over $50 million in payouts, which is absolutely incredible. They have the very best infrastructure in place for longevity from an in-house broker, so they can offer the very best trading conditions and platforms that all traders love to use. They're still able to offer services to the US as well, so the US traders can still trade with them on particular platforms. They have institutional experience, so they know how to manage a prop firm correctly and have such an incredible team on hand, on top of which they have both a pro and swing plan. So depending on your style and strategy, you can choose which one is best for you. Now you can use and get the highest discount available at anywhere using Riz25. So that's RIZ25 for 25% off all challenges. The link's in the description below. So let's get back to the episode. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a Forex trader, whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella. So use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode.
grading your setups is really important. So if you don't know how to grade your setups or you don't know what your A+ setup is, you have not earned the right to size up yet. So I think that's really important. Number one is just understand that if you do not know what your best setup is, you have not earned the ability to size up yet. So without knowing what your best setups are, how the hell are you supposed to put more money to it, right? So that's number one. Number two is why not wait for those A+ setups? So the way that I think about it is like those A+ setups are like the Super Bowl, whereas the other setups are like the regular season games. So you want to participate in the regular season game so you're fresh, you're nimble, you're loose, so you're in practice, you understand what the market is like so that when that Super Bowl comes, you're already ready to go. If you're just waiting for that Super Bowl setup, chances are you're not in sync with the market. You don't know what the cycle is. You don't know what's going on. You don't know, you haven't been kind of trained with what's been happening in the market. So for me, that's the way I think about it is like stay participating in those regular season games, make 1,000, 2,000, 3,000, whatever it might be. And then when that Super Bowl comes, not only have you built a cushion from those regular season games, you're very in sync, in tune with the market that you could just smoke it.
Mm-hmm. Because is that the case? I feel like a lot of people get the misconception that an A+ setup can happen so frequently versus.
I wish.
I bet. But what I loved what you said there is that if you haven't graded your setups, then you don't have the ability to size up.
You haven't earned the right yet.
Yeah, I think that's a much better way of saying it, actually, yes. But in terms of that though as well, do you feel like majority of sort of people who are beginning in trading, maybe beginning in terms of finding profitability and are just in the process of maybe starting to grade their setups should be using more of a fixed risk anyway because they haven't really developed that experience and, as you said, have done the work necessary to start to diversify or dynamic that risk?
Yeah. I think you should track your statistics, first of all. Like, no matter what, just track it. When I first got started trading, I tracked my statistics. I found that I lose money after 10:30 a.m., so I cut off my trading after 10:30 a.m. I learned my sweet spot in tickers is between $1 and $10. Usually over $10, I lose money. And I found out that I always lose money on Mondays because I'm so excited over the weekend to trade that I get a little bit overeager. So by having my stats, now I learned to take it slower on Mondays. I learned to walk away at 10:30. I learned that if I'm trading stocks over $10 to be a little bit smaller. Now, after 10 years, I kind of know exactly what my problems are, so I don't need to track as much. But I think every new trader should start by tracking their stats, being able to understand what they do right, what they do wrong. Maybe you find out that you make the most money pre-market, so you cut out everything after. For me, there was two methods to do. It's either A, after 10:30 a.m., find a new strategy that works, or cut off my trading and save money. Because what would end up happening is Bao and I would make money every single morning, and after 10:30, we would try to go for like all day faders. We would try to go for these bigger picture moves. But what we ended up realizing is after 10:30, the volume shrinks, the algos take control, and these stocks start rebounding. So what Bao would do is Bao would continue to trade. Let's say he would make $5,000. He would continue trading after 10:30, and he would lose $1,000, $2,000 because he's trading throughout the day. The algos are taking over, and he's losing money. For him, losing $2,000 doesn't really matter. But in my head, I was like, wait a second. $2,000 is $500,000 a year. If I just stop trading, I'll make an extra $500,000 a year by not losing that money. Bao's got plenty of money, doesn't care. He's doing it for the sport. But me, at that age, I was like, bro, that's a lot of money. Let me just stop trading. So for me, I found my edge to be from 9:30 to 10:30 and just cutting out everything after rather than trying to trade all day, find a new strategy. And that would have only happened after tracking all my stats.
It's interesting you mentioned that, actually, because I truly believe that is the biggest hack in trading, is learning how to take less trades, especially the trades that are essentially lower probability, so normally losses, because you can't predict the losses. It'll be very, people will probably try and twist that to be like, he's saying just don't take losing trades.
Yeah.
I am trying to say that. but yes, that's the true hack, right? Where you just take less trades, so less lower probability trades, which then leads to less losses, which means you make more money without taking more trades.
Correct.
It's the best thing. Especially when you put it like that, when it's actually equaling to 500K, which I think a lot of people in the trading space, and generally, to be fair, because of social media and everything's just more digitalized now, I think we get so accustomed to, smaller amounts, like $200 here or even $2,000, what that actually amounts to by the end of the year. And I think that might kind of go into sort of like the short-term mindset, that short-term vision versus the long-term vision. As a trader, though, how important is it to have that longer-term vision within the markets to even achieve sort of the P&Ls that you have over the years?
Yeah, it's really important. So the way that I think about trading is if you can do it right, you can make more than a doctor, lawyer, and engineer combined. Problem is, doctor goes to school for 8 years. Lawyer goes to school for 5 years. Engineer goes to school for 4 or 5 years. So to be able to make more money than these people, you have to be at least willing to invest a couple of years into it. So for me, my mindset is it is a long game, but if executed properly, we were talking about it earlier, I made a surgeon's salary in 1 day, right? So it took me years to be able to learn the methodology, the lessons, the patterns, the tape reading, everything that comes into that 1 day. So it took years of, trading, years of those regular season games, years of those Super Bowl games to then have that opportunity for when an even better Super Bowl came to capitalize. So that's what people need to understand is like, if you want to make more money than a doctor, lawyer, or engineer, it's possible. It's going to take time, but are you willing to invest in that time? For me, I'm so willing to invest in that time. And now my next thing is I'm trying to push that $1 million day, which I haven't had yet. So maybe it's going to take me 11, 12, 13 years of trading lessons to learn how to have that $1 million day, right? So I'm willing to take the time because I understand that to be able to be in this elite group of people that make high earning money, it takes time. So there's no business out there. There's no opportunity out there that doesn't take time to make money. And if you think anything less, you're just wrong.
How do you stop yourself from allowing those thoughts of like trying to put yourself into that caliber or trying to have the milestones of like $1 million day, for example? How do you stop yourself from allowing that to control the emotions, heighten the emotions, essentially make mistakes? Because that's what I feel a lot of traders do. You know, we're in the prop firm mania right now when it comes to futures and Forex, for example. And loads of people do it all the time, every year. You know, you see someone who's like, their goal is to hit 1 million funded, 500 funded, whatever it is. And they allow that goal to dictate all of their emotional standpoint, which then means that they perform terribly in the market. They don't achieve that goal. And then they just go around in spirals and circles. While you're here saying you're going to put yourself in this this sort of level of traders, as well as trying to achieve a $1 million in a day. So how do you control that? How do you have these goals, but not allow the goals to dictate what you do in the moment?
Yeah, that's really important. So I guess a little bit early on in my trading career, I did let it dictate me, and it led to a lot of significant losses because I would see guys on Twitter and social media making $500,000 on a stock that I made $50,000 in. And I was like, what the hell? Like, what am I missing here? So early on, I did let that get to me, but now my mindset is if the opportunity's there, I'm just going to see how much I could capitalize in the opportunity. If it's 100,000, if it's 400,000, if it's $1 million, all I'm going to do is wait for that opportunity. So I'm not trying to push the $1 million day out of that regular season game. I know that when that Super Bowl comes, and if the opportunity is there and my account is well capitalized, right? Because you need capital to make money. I like to wire out my money. I like to, reward myself, but that's an aside. I'm just going to wait for those opportunities. If it comes, it comes. If not, no problem, because I've lost so many times trying to push for that. That now it's taught me, you know what? Just wait for the opportunity. Based on the opportunity, just trade it the best, and that's it. Like for me, whenever these big opportunities comes, I'm not even looking at the P&L, to be honest. I'm thinking about the chart. I'm thinking about what I'm seeing, because oftentimes I was very influenced by the P&L. I would be up, let's say 96,000. I'd try to push for 100,000, and I end up losing 20,000, right? Or if I'm up 200,000 and I look at the P&L, I'm like, it's good. Let me take the money and run. Stock goes a lot lower without me, right? It goes in my direction without me. So I found on those Super Bowl type of days, I'm influenced by the P&L, so I just don't even look. So my mindset now is if that opportunity is there, that Super Bowl setup is there, I'm just going to try to trade it as best as I can. Whatever P&L happens, it happens.
It is interesting. In terms of that, though, because one thing we haven't touched on is that you're purely a short seller.
Yes.
Like, that's all you do. In those scenarios, as part of that strategy, how do you determine targets, for that style of strategy? Because as you said there, so like you might have a sell-off, make good P&L, but then it keeps on dying off without you. So what do you put in place? How do you sort of navigate those targets? How do you navigate those sort of things when they happen to control yourself and say, okay, as you said, like my target's met, done.
Yeah. So a lot of the big lessons I learned were really early on in my trading. And for me, what I would end up doing is I would be setting these arbitrary price targets in my head. Let's say I would short a stock at $5. I'd be like, it's going to go to $2. I'm not covering until it goes to $2. What ends up happening is it goes to $2.50 and bounces back, right? So in my head, I learned not to set arbitrary price targets because the market doesn't care about your price targets. All the market cares about is support and resistance. That's as simple as you could be, support and resistance. So what I try to do is I try to short at resistance and cover at support. Every time it breaks a support level, I reduce and reduce and reduce and reduce. And if it reclaims the support or reclaims the support after that, I just get out. So I use the chart. I keep it very, very simple because I don't want to set price targets in my head. It happens all the time where I say, I want the stock to do X, it does Y, and I minimize. But if every time I reduce based on the chart, what the chart is telling me, is the stock holding a higher low? Maybe it's better to reduce. Is the stock reclaiming VWAP? Maybe it's better to reduce. Is the stock, setting a reclaim candle after it breaks a low day? Maybe it's better to reduce. Rather than, it's going to fail to bounce. Oh, it's going to do this. It's going to do that. I know the stock is toxic. They're going to have an offering, this, that. Market does not care about your thoughts. Market does not care about your price targets. Short at resistance, cover at support. If it goes lower without you, big deal. At least you made money, right? Because that's been something that happens all the time, right? And we'll talk about the DJT trade, but I got to have DJT at, I think it was 39 or 40. Right now it's trading at 28. I could have made another $400,000. But my thought process is it did what I wanted. It went down to support. It reclaimed support. That's it. I'm done.
Yeah, so the DJT trade, you just made 400K on literally a week ago?
Yeah, a week ago.
A week ago, which is incredible. Yeah, so congratulations on that trade. Is that the largest P&L on a single trade you've done, or have you done?
No,
large?
probably the largest would be AMC, which was about 700,000 in a day.
Wow.
And that was also on the short side. But this was the largest P&L of the year. I would say the largest single P&L of the year. Yeah.
Phenomenal.
Yeah.
Phenomenal. And as you mentioned though, so like, it's really interesting. It's the same question, well, not the same question, but very similar. It's like you're getting so close to that 10 million mark now in terms of total P&L. You've got that $1 million trade sort of on the horizon. This one could have potentially got there, right? If you were to hold longer. You then on top of that, Trump's been elected. The markets are very volatile at the moment with that transitional period. On top of that, you're on your honeymoon and you need to take a break, right? So how do you control that? And the reason I ask that is because I know there's so many people who have that, really struggle with that control. Let alone being all those factors and then being on your honeymoon makes it a bit maybe slightly easier being away.
Yeah.
Right? But I know people who say, like you mentioned earlier, like your 10:30 cutoff, they'll say it, but they won't stick to it.
Yeah.
So like what gives you that resolve, or where does that stem from for you to have all these different factors, but to follow the rules?
Oh man, it's so hard. It's so hard, especially right now with everything that you mentioned. It's so hard. So
am I making it worse for you?
Yeah, making it a little bit worse. I'm about to check my phone, whip out the app. But to be honest, after 10 years of trading, as much as I love it, as much as I'm passionate about it, I need a couple of days off, right? So my thought process was, you know what? This is the only time that I'm able to take off, the only time after 10 years I could truly disconnect from the market. So I really want to just walk away to be able to come back refreshed, come back with a clear mind, come back with a different mindset. Because, when you're in the trenches every single day for 10 years, you kind of forget what the real world is like, right? You kind of forget. So here we are in Dubai. It's beautiful here, staying at the most beautiful places, like experiencing the most beautiful things. Like I want to not only enjoy the high of nailing that DJT trade, but also enjoy like being on my honeymoon and enjoying what that's like. So it's extremely difficult. I mean, if my wife is watching this, I'm still checking quotes on my phone, like when she's not looking, because I can't stop. I just want to be in tune with the market,
of course,
so that when I come back, I'm prepared. But as for trading, it's very, very difficult. But what really helps is I had a really big trade before, and that's not always the case. I'm very blessed and very lucky that happened, that it kind of makes me avoid the FOMO. But to be honest, it's very, very difficult because once you're all in on trading, you're really all in. So it's tough, but I'm just trying to think of it as a way to mentally refresh. I'm thinking of it as a way to see new perspectives in life. And by kind of clearing my head, I think it'll help me, achieve the milestones and targets I want to achieve towards the end of the year.
Is one element of it as well that you've been trading for 10 years now, right? And you've made money.
Yeah.
And over those 10 years, no doubt there's always been opportunities that come along, right? So is that part of it as well, do you feel like? Because that, okay, I might be missing out right now, but there's always more opportunities.
That's something that I struggled with because I'm the type of guy where I hate missed opportunity. If this DJT trade happened or PHUN happened while I was here, it would ruin my mindset.
Really?
It would ruin my mindset because I would know, I would nail that thing. I would have nailed that thing. And what's going to end up happening is I come back, I use that mindset on the wrong stock, and I end up losing money.
Yeah.
So maybe, I don't know, maybe it's better I don't even check anything, right? It might be better that I don't check anything, but it's so hard in this day and age with social media. You have to delete Instagram, Twitter, everything because someone's always posting something.
Yeah.
Right? So for me, like, it's tough, but like I said, I'm just trying to live and enjoy the moment because when I look at it, these 2-3 weeks of the honeymoon are going to be over before I know it anyway, right? Before I know it, it's going to be back to work.
Very true, yeah. Very true. In terms of the DJT trade, sorry. You mentioned, I believe on a tweet, was it A++ sell, right?
Yes.
What made that an A++ sell?
Okay, so let's first start off with the week before, which was PHUN. So if traders of this podcast remember years ago, before DJT was DJT, it was DWAC, DWAC. So it was a stock that I think did a reverse merger with Trump, and the stock went from, I don't know, $5 to $150 in a day, right? And back then, DWAC, which is DJT, ran with a stock called PHUN, fun. So DWAC, aka DJT, was the head of the snake, and PHUN was a sympathy play. A sympathy play happens when people are trying to relate one stock to another. The main runner is getting all the attention, all the hype, and traders are like, let me find the next one.
Okay.
And what you end up finding out is the next one is never as strong as the first one. And the one after that is never as strong as the second one, right? So I made a career off shorting the sympathy plays because these main head of snakes were very difficult. Actually, Bao said it best. He's like, don't try to slay the dragon. Let the dragon slay everyone else first and then come for the next one, right? So back then, when PHUN was moving, they were moving together. That ended up crashing from like whatever. DJT went from 150 down to like 20. PHUN was like 5 to 30 and came back down to 5. So fast forward a couple of years later, by being a trader and understanding that they moved together, I knew that PHUN was a sympathy play for DJT, and PHUN went from 5 to about, I think it was like $15 maybe, somewhere along those lines. And what I end up thinking is like, all right, PHUN is a sympathy play to DJT. PHUN, chances are, the moment it starts to show a little bit of relative weakness compared to DJT, it's going to unwind. Relative weakness means that if DJT is going up, PHUN is going down.
Yeah.
Usually they're correlated. If one's going up, the other one's going up. So if the relative weakness is happening on PHUN, then that's what I'm going to look to short it. So PHUN was around $13, and they had a catalyst. They had news that their CEO was resigning. I don't know about you, but if any time a CEO resigns, it's bad news for the company. So now here we have a stock that's up pretty much on no news, is a highly dilutive company. It does reverse splits all the damn time, and it really has no reason to be up. A catalyst came, which is the CEO was resigning. So that finally gave a reason to profit take. So my thought process was, okay, this PHUN is extended. It has a catalyst. And finally, it's showing relative weakness compared to DJT. So I shorted PHUN, and I shorted around like $10, $11, and the stock ended up closing around $8.50. And I made $150,000. So number one is I nailed that first primary trade. That gave me confidence. That gave me confidence that I was understanding the process, and it also gave me a cushion in my trading account. Now, all of a sudden, I have $150,000 extra in my account. Now, I have two options. I could either wire out that money, buy myself something nice, or keep it in there and wait for this DJT trade to now unwind. So I decided to keep the money in there. Now DJT comes along. So DJT was running up from about $10 to about $50 in anticipation of Trump winning the election. So I already knew in my head that this was going to be a sell the news setup. So what a sell the news setup is, you buy the rumor, you sell the news. You buy on Trump trying to win the election, and you sell the moment he gets elected. So my thought process was DJT is going to run up until November 5th. After November 5th, it's going to gap up and then crash. But because the stock was so extended before that, right, it was already super extended. My thought process was before the sell the news even happens, there should be at least one profit-taking day. And that profit-taking day is where I'm going to try to capitalize. It just so happens that the day of the election was the day of my flight to the honeymoon. So I missed the sell the news trade, but it ended up actually working out because it gapped up to 52. Now it's at 28. But before that, on that profit-taking day, what ended up happening is DJT went up pre-market to about $59. Market opened up. It went down to as low as like $46 and ended up rebounding. So when it ended up rebounding, usually what ends up happening is the stock rebounds and fails. But that day, it did something very odd. It rebounded and continued to go up and just kind of close like in the top of the range. So my thought process was like, I lost a little bit of money the day before, and I was like, this is kind of odd. Oftentimes when the profit taking comes in, the bounces fail. It ended up trapping most short sellers, and it ended up rebounding back. Now, the next day, my thought process was, all right, everyone that shorted is now scared of a bounce. It's set atop now, right? It's the first day that it didn't break over the high of the day. It's the first day it didn't gap up. So my thought process was, okay, they must have tricked the short sellers into covering out. They must have tricked the long bias traders at 60, 70, 80 is coming. And chances are the inverse is going to happen. So this is the first day, the day after that. The day after it tanked and bounced, like a V-shaped recovery, it bounced. The day after that, it gapped down. Gapped down, was unable to make a new high. So now my thought process is, okay, I'm going to short the bounce on the gap down with a stop over the red to green mark. Stock opens up 48, bounces to 49, goes down to 48, breaks a new low. Okay. Now it kind of does another waterfall down, the same thing it did the day before. But this time, when it rebounded, the rebound failed. So what ended up happening is the day before, when it rebounded, it reclaimed. So I think a lot of traders were like, okay, the second day that it rebound, it's going to reclaim again.
Yeah.
The inverse happens. The inverse happens because everyone's always expecting the same thing. Mm-hmm. So at that moment, when I realized that that rebound was failing, the inverse was happening. It was red on the day. It could not make a new high. It broke VWAP. It broke low of the day, and the bounce failed. I loaded it. I loaded in, and the stock just crashed and crashed and crashed and crashed all the way down to 39, and that's where I made the money.
And that's how you make $400,000.
Yeah.
What I absolutely loved about that was the narrative building. So it wasn't just a case of like, on this day, I saw this, this, and this, and that was it. It was more so like, this happened. Well, first, it started a week before.
Correct.
Which was incredible, right? So we already had a narrative already formed on a completely different trade, which had some sort of correlation. But then once you started looking at DJT itself, the whole process continued.
Correct.
And I loved hearing that from day to day, the narrative between the buyers and sellers, what the price did, and then what information you took from that to dictate these decisions.
There was a couple things that were really important to note about that stock. Number one is every time it tested the VWAP before that, it would bounce. Every time it broke the low of the day, it would bounce. And every day it would create a new high of the day. On that day, it broke VWAP, it didn't reclaim. It broke low of the day, it didn't reclaim. It could not break over the high of the day. So everything, it had a change in personality that day. And that change in personality is what told me, all right, game on. Pretty much that change in character was what told me, all right, it's time to get a little bit bigger. It's time to get heavier. But I'm telling you, man, and then that was 2 or 3 days before the sell the new setup, and then the sell the new setup happened, and I just did the same thing. So very, very blessed that that stock provided massive, massive opportunities for all types of traders. Because let's be real, there was people that capitalized on the long side on the way up.
Yeah.
But for me, being able to not only see one opportunity, but see 2 opportunities on it was really, really special. So now at that point, I had the $150,000 trade from Fun. I had the $400,000 trade from DJT. At that point, I wired out before my honeymoon, right? At that point, I'm like, you know what? I'm not going to push it any further. Take the money, reward myself, because that's also something that I see a lot of traders struggle with is they keep their entire net worth in their trading account, which I do not agree with at all. Because what ends up happening is all you need to do is be on tilt one time and you lose your ass. It's happened to me. It's happened to me. So for me, what I like to do is after a big win, I like to wire out, put that money into the bank, invest it, diversify, keep a little bit of a nest egg to reward myself, because if the money is just sitting in your trading account, it's like numbers on a video game. It doesn't mean anything. But if you wire out the money and you see it hit your bank account, there's a different type of relief that you feel, because you feel safer.
It's strange though, right? It's strange because they're both on the screen. And they both look very similar, but it's like when it's on the bank, wow, that's incredible. When it's in the trading account, you're like, I got so much to play with. It's like such a different mindset.
If the money is there, you're going to use it is the problem, right? You're going to use the money. But for me, like, I'm always the type of trader that I like to diversify my income. So like, let's say I take that, $550,000 out. Maybe I'll keep $100,000 in the bank. I'll put some into indexes, some into real estate, venture capital. So I like to take my money and let it work for me, because in the market, with the amount of leverage that they give you these days, you don't really need a large account. Yeah. Most brokers are giving you 4 times leverage. So even with a $50,000 account, you could have $200,000 in leverage. For the small cap stocks that we trade, it's plenty. So for me, I've always been the type of guy that I keep my accounts a little bit smaller, which helps and hurts me in certain scenarios. But during this time, it was actually the perfect storm, because I was extra well capitalized from the trade beforehand, and I had the confidence to push a little bit further,
So do you start the year with a particular account size and then sort of let it grow and take out accordingly? Or are you someone who starts at a certain size, makes some profit, take it out? Make some, and you're probably compounding small amounts as well through the year for the cushion.
Yeah, it's actually, we talked about this last time. So I did at the beginning of the year, not this year, it was I think last year, I started a $35,000 account and I wanted to see how fast I could grow it to $1 million. And it took about 55 days.
Yeah, I remember. Yeah.
So I have that. I'll send you that too, the broker statement, the P&L spreadsheet and everything. But usually I like to start my account at 35,000 because it's 10,000 over the PDT, gives me a little bit of wiggle room. And what helps me is every time I get to 50,000, I wire out. If I see certain opportunities coming up, because you know when there's opportunities, if you're stalking them, I like to let the account grow and grow and grow a little bit more. But I found that if I just wire out money, it not only keeps me more humble because I'm trading with a smaller account, but also allows me to feel more comfortable as in taking a paycheck home. Because what I found is like, let's say my account is $100,000. If I lose $20,000, I'm like, oh, fuck it, 20,000. It doesn't really matter. But on a $35,000, $40,000 account, I can't afford to lose that much. So it helps me stay more disciplined, you know? So I think that not only being able to wire out money, put it aside, but having a smaller account will allow you to be more nimble and not take boredom trades, not take stupid trades. Because at this point, even with 30 to 50,000, I could still pull out $5,000, $10,000, right? So my mindset is, every time you have a big win or every time you hit a certain number, pull out money, reward yourself, give yourself a paycheck, because trading is not linear. Meaning that if you make money in February, you're not going to make money every February. If you make money in February, you might lose money in March. So when the times are good, when the highs are high, take out money, put it to the side for a rainy day, because you don't know if next month it's going to be a tougher month, if there's going to be a lot more choppy trades. But if you have money in the bank, it kind of gives you that security to be like, you know what? I don't really need to push the stock right now. It's slow. Let me just wait it out. Because what ends up happening is when it's slow, people take boredom trades. They start, if I'm a small cap trader and there's nothing moving, oh, let me trade Nvidia today. Oh, let me trade crypto today. And you end up losing money. But it's better in those scenarios when it's slow to not even place a trade and just rely on the cushion that you've built in your bank account. And that really helps me, because now I feel like, all right, if the setup's not there, I just look at my bank account and I say, all right, last month was great. I have money aside. And maybe, for example, let's say you make $20,000 in February, but you make nothing in March. And I think in my head, all right, I made $10,000 for February and I made $10,000 for March. I kind of split it up to kind of fix my mental a little bit more too, you know?
Yeah, because we're not accustomed to going to work, but not getting paid, right? So then that is definitely what's going to help. But off the back of that, you mentioned, I believe in a tweet earlier in the year, that April was a red month. Yeah. And April seems to be like, from your data, a red month quite consistently. Yeah. How do you handle those moments? Like when you're a profitable trader, you're making 7+ figures a year, and yet you still have losing months.
Yeah.
That's not right? That can't be correct.
Yeah.
That's what people would say.
Yeah.
That's what people say. To be fair, I was one of those people at one point. But yeah, like what is the reality of that when you're at a certain level and you still experience those red months? What's the thought process like in those moments?
Yeah. So I can't speak for other traders. I can speak for only myself. It still sucks, dude. It still sucks. I mean, like, you know, if I make $10,000, it doesn't really feel like anything. If I lose $10,000, it pisses me off, right? It doesn't matter. It's just like, because as traders or as, you know, men, some people have an ego. They want to be right. They want to be proven right. And the market is designed to, you know, take advantage of all of your weaknesses in human emotion. So for me, it sucks. It sucks no matter what level I'm at. It doesn't matter if the day before I made 100,000, if I lose 10,000, it pisses me off. So what I try to do now is, I've been through enough holes in my trading. I've been through enough droughts in my trading that the number one thing that I think about is just get back to basics. If you could get back to basics and kind of get yourself out of that hole mentally, then the profits will just come back. So my mindset after a losing day is keep it very simple. So if I lose money, doesn't matter if it's 1,000, 10,000, 100,000, my goal the next day is to show up and be green. It doesn't matter if it's $1, I just want to be green to get that confidence back. Because what ends up happening is no matter what level you're at, you think in your head, oh man, maybe I just got lucky. Maybe I'm not really, maybe I suck. Maybe whatever it is. So to get that confidence back, you just need a win under your belt. It doesn't matter how small, how big, whatever. So number one is get that win under your belt. Number two is don't deviate from what you normally do. So if you're a small cap trader, don't start trading large caps. Don't change up your strategy. Don't try to adjust. Don't do anything. Just stick to the basics, right? So for me, what I like to do is I like to short broken stocks. So if a stock is setting a top pre-market and slowly coming back down, I know that that bounce is probably going to fail. So I'm only waiting for that rather than a day one hot stock that's going crazy up and up and up. I don't want to mess with that. I want to stick to my bread and butter, which is waiting for the broken stocks, small size. I want to size down so that I'm not emotional and get a win under my belt. And more often than not, after I get that win under my belt, I'm like, you know what? I'm going to be fine. The problem is that after a losing trade, what people do is they double their size. They start to trade more aggressively. They start to trade more emotionally. And all of a sudden, now that $10,000 loss is $20,000, $30,000. Now you dig yourself a hole even larger. So for me, get back to basics. Be green, just small, just to get that confidence back, right? And even if you're not green, so long as you stuck to your process, you stuck to your niche, you stuck to everything that you normally do, and even if it's small red, that's okay as well. You just cannot deviate. You cannot make the hole even larger because what ends up happening is if that hole gets larger, your mindset gets even more screwed up, and you don't want that. You want to be able to fix your mindset, your mental as quick as possible, not by making the loss back as fast as possible, by regaining the confidence of your trading, of your experience, of your everything.
Do you think, again, if you were to reflect back, because now obviously having 10 years of experience, having these P&L years, having these moments where you have a red month or a losing streak, but then pulling it back and going through this process, when you first started to have these moments and you first had to handle it, was it a drastic difference in how hard it was to maintain that level of balance and maintain your word, essentially, like stick to the words you're saying now? Because even though you said it still sucks and it probably still has some difficulty there, but in comparison to now, when you've got all this experience, you've experienced it a bunch of times, so you know to trust your system, you have that longer term vision, versus back then where the longer term version might have been shorter. It was the first time sort of trying to overcome these hurdles, so therefore the emotions are a lot heavier. It's so much easier to fall off track. What was the difference there? Like when you first started doing it, is it something just for the audience really to understand, like it is going to be hard in the beginning. You're going to have to hold yourself accountable. Yeah. And if you don't, it's not going to happen. Until you do, it's not going to change.
Yeah. What I've learned through trading is that losses are the best lesson of all. The question is, how much money do you want to lose until you learn the lesson? So for me, I had to lose money when I would have a losing day. I would come back the next day, size up. I'd try to make the money back in a day. And I ended up losing and losing and losing and losing. So it took me losses upon losses upon losses after those moments to realize that that's not the way to do it. So the question now becomes is, do you want to listen to the advice of a trader, or do you want to lose money to figure that out on your own? And most of the time, even though people listen, people know what to do, they're stubborn. They don't want to do it. The question is, how much money are you going to lose trying to learn the same lesson that I learned, right? So I lost money, man. That's the honest truth, is I had to lose enough money to learn that that's not the thing to do.
Did you have to lose enough money until it was really, truly painful?
Yeah, big time.
Yeah?
Big time. Unless, and I don't care what traders say or what they do, there's moments where you break down as a trader. There's difficult moments. You will never meet a successful trader that has, number one, not been humbled by the market and not broken down into the tiniest little piece of dust after a losing day. And until you experience those moments, it takes trauma to make you to grow. It takes you to go to rock bottom for you to grow. Same scenario with my girlfriend, right? I had to be at rock bottom to grow. And a lot of traders, they have a choice at rock bottom. They say, you know what? I quit. Or you know what? There's only one way to go, and that's up, right? So depending on the type of person you are, you're either going to be in the bucket of 90% of traders fail, or that moment of rock bottom, that moment when you are at your most vulnerable, at your weakest, at your most fetal self is when you can build yourself up. And at that moment, whatever moment it is for any trader, understand that that moment, maybe you're going through it right now, is the moment that's going to determine whether you make it or not. And it's up to you at that point. It's up to you. And for me, I knew that in that moment, whether it be at Starbucks, whether it be losing, whether it be struggling, is I wasn't going to give up. And because I wasn't going to give up, that's where we are today.
That's it. That's what it takes. That's what it takes. It's so true. Because as we said near the beginning of the podcast, to be fair, which is, it depends how you use it. You can use it to victimize yourself. Oh my God, why am I in this position? Why did this happen to me? Or versus, you might still have that feeling, but alternatively using it, saying, hey, I'm going to do way better now. Yeah. I'm going to make sure. Was it a case though, in terms of the trading side, was it a case where you had to essentially give yourself an ultimatum? I personally had to do that for my trading, where I was just losing. I was basically just gambling.
Yeah.
And it got to a point where I had to sit there and say, either I quit trading or I change.
Yeah.
And if I say I'm going to change and I don't change, then I have to quit.
Yeah.
And that's it. And then that is kind of really what helped me, this ultimate account. It's like burning the boats, is what they say, right? You're burning the ships. Like, there's no turning back. You've arrived on shore, ready for war. There's no turning around. And that really helped me. That really helped me, having that sort of ultimatum, that moment, because I didn't want to go that other path. I didn't in my head, I was literally saying, like, if you don't fix up, you have to go get a job and work a normal, average life that is fine for the people who find joy in that and happiness in that. But for me, it wasn't what I wanted. But I was at the point where I was like, you can't keep doing this. So you're going to just have to get okay with that. And because I didn't want to be okay with that, it pushed me. Is that something similar or?
Yeah, that's what happened when I sold the rims off my car. That was the last time. I said, if I lose this $2,000, I'll quit. I'm done. Because now I don't have a car. I don't have anything, right? So that's the moment for me, is that at that moment, I had skin in the game. Mm-hmm. So I think that actually makes a lot of sense, is if you have a little bit of skin in the game. So I'll give you an example. So I don't recommend this. I don't think anyone should do this, but my mentor, Bao, he was an engineer. He was making about $200,000 a year as an engineer, and he said that he would quit his engineering job if he made 2 times his salary trading. So if he made $400,000, whatever. So back when he started, 20 years ago, he was struggling as well. So what he did, which again, I don't recommend, is he took out a loan on his house. And that was his moment where he was like, all right, this is it. At this point, if I don't make it, I quit. And lo and behold, years later, he had, back at the time, it was the record for the largest retail trade in one day. It was $1.4 million in one day.
Wow.
That was, 15 years ago. But that's what happened. That's what happened.
That's incredible. I think it's that classic saying, like, as you said, you don't recommend that. But I think the lesson from that, which you can take for any successful person in any endeavor, is the willingness to take risk. And obviously trading is all about that. Yeah. That's what trading really boils down to. But the reality of success, whether it's a podcast, whether it's sports, whatever it is, it's always the risk. Like, you have to overcome fear and really get used to taking risks. And that's the biggest bit, I think. And I think the ultimatum is like taking that big risk. The example there with Val, taking that big risk. I think people will have to find themselves in trade, especially the trading, obviously traders listening, is that they would have to find themselves when they get to that position, are they willing to take the risk or not? And it's such an interesting and beautiful journey trading is, because I don't think you can really, it's really hard. It's so strange because it's like you can't really compare it to anything else. I don't think. Is there anything you can compare it to? I don't think so. I think like the ups and the downs in comparison to other things, like there are stressful jobs out there for sure. But trading wise, even when you're essentially a professional, essentially profitable, it doesn't change though. Because when I hear from, like when you see Lance talk about when he's trading, right? And you see that he's saying like, I haven't slept, or, I'm going into a shift. And you think, you don't have to do that, right? Like at this point, you could not trade again. But it's like, what is that about the markets that really just pulls you back in to try again? Is it the mental challenge, do you think? For a lot of the traders, even for yourself, is it the mental challenge as well as the monetary side that keeps you going?
I think it's passion. I think it's competition. I think people just want to see how good they could get, right? Because like for me, like there might be traders that look up to me like, oh my God, he made 400,000. But there's traders I look up to that maybe on the same trade made 4 million, right? And there's those traders that look up someone that made 40 million on the same trade. So in trading, there's always going to be someone that's making more than you. There's always going to be something that you could learn from. And I think to be a good trader, you have to be passionate about the market. And that passion drives you to a place where you're interested in learning more and interested in getting better and interested in the whole mechanics of the market. So I think that successful traders, to be able to get to the point that they're at, they have to love what they do. They have to be passionate. And then that next level is learning even more about the market. So I think that's why a lot of people continue is, it could also be that like they don't want to miss opportunity, right? These are really great opportunities, right? Like you had GME, you had AMC, you had Bed Bath & Beyond, you had the China stocks, you had DJT, you had PHUN, you had SMCI recently with the Hindenburg report. Like there's so much things happening in the market right now. It's like, and now that Trump is elected, we're going to get midday tweets. We're going to get crazy stuff. Like I think right now, honestly, is going to be the golden age of the markets, right? Because Trump is coming in.
Yeah.
Interest rates are coming down.
Yeah.
People are going to have more money. They're going to start gambling on these penny stocks. And if you are in the right place at the right time, I don't want to say it's going to be like the pandemic again, but there might be really, really, really big opportunities to come, right? So I'm really excited. And I really just can't wait to see what else the market is going to bring us.
Can't wait for your honeymoon to end.
Yeah.
Get you in trouble.
I promise you, we're not trading. I love you.
No, I love that. And I couldn't agree more. Because I think like Trump coming in is really weird because like, obviously I'm from the States. I'm not from the States, so I'm from the UK. So like, for me, I'm there like I want Trump in just from a trader's perspective. For
sure.
You know, from a podcasting perspective, great things to talk about. From a market perspective,
Business,
there's going to be
everything.
movements. Yeah. But then obviously, if I said that to someone from the States, depending who I say it to, you could get a very harsh reaction for that sort of response. But such is politics across the world, really. But yeah, like it's crazy. This election seemed a bit bizarre in comparison to previous ones. Not that I've watched too many, but I remember I actually landed in New York the day he got elected the first time. And that was an experience in itself. I can only imagine what it's going to be like this time. He won by like an insane amount.
The market's like Trump because number one is he plans on reducing the corporate tax rate. So in just basic math is if a company has $1 million in revenue and they're paying 20% in tax, that's $200,000, right? But if all of a sudden Trump comes in and he says the corporate tax is going to be 15%, all of a sudden these companies have $50,000 more money times the multiple of the company, which means that automatically the stock is going to be worth more. So that's why you're seeing the major run up in all of these large cap companies because they know that with corporate taxes going down, the companies are going to make more money. If the companies make more money, the stocks are going to go up. So they're front running it. And now with interest rates coming down, these companies that now have a ton of money are going to just borrow more money, add to their balance sheet, use the borrowed money to do stock buybacks, right? So there's all these little nuances happening at the market in the same time that people don't even realize. Like as we're recording this, Tesla is near 300, right? So I saw something out there that said that Elon Musk spent like $150 million helping Trump get elected. And the next day the stock went up and his net worth was up by 20 billion.
That's a good ROI.
So you think in your head, like there's really a lot of things that are happening behind the scenes that we may not even realize or may not even know about.
Yeah.
So for me, I think that Trump is very bullish for stocks. I think he's very bullish for crypto. I think he's very bullish overall. So I think these next 4 years are going to be filled with tons and tons and tons of opportunity. And just like people missed out during 2020 and 2021, please don't miss out on 2024 to 2028 because I think it's going to be life changing.
Someone hearing that again, like what happens to them is just emotion. They hear opportunity. 4 years, they think, oh my God, I'm going to miss out on this. What do I do? My thought process would be all you have to do is just educate yourself.
Yeah.
Would you say as well, on top of educating yourself, though, keep it simple? Because I feel like there's a huge narrative in the markets, and I think it's probably always been there, to be fair. Even if we went back 20 years before social media, there's probably seminars where people would try and overcomplicate and use certain terminology to really create this like a law of a strategy, whatever it may be. But whenever I've spoken to traders such as yourself, it's always just very simple.
Yeah.
Keeping simple, focus more on the risk, focus more on your setups, focus more on the data versus anything else. Yeah. Versus what I see a lot of retail traders is always there's such a focus on strategy and complexities and again trying to find the holy grail, which is really bizarre because you'd think by now, after years of everyone being on socials now and the internet being so widely available and the amount of information on there, that people would have figured out that there isn't a holy grail out there. But what are your thoughts? Like, do you think traders would perform much better if they just kept things simple and focused primarily on those foundational things we've mentioned already?
Yeah. Have you ever seen that meme of like the 150 trend lines on a chart?
Yeah.
So like that's what I envision is what you said. It's like trend line everywhere. You can't even see. Like it draws out like a SpongeBob or something, right? So for me, when I was at SMB Capital, one of the best traders there, a guy that was making multi seven figures, probably an 8-figure trader now, to be honest. But what I saw him do was very, very simple, and it's going to sound crazy, but here it is. He would always short at resistance, and he would always buy at support. He would never buy at resistance. He would never short at support. So something as simple as that, right? You don't want to buy the breakout. You don't want to short the breakdown. You want to short resistance. You want to buy support. Something that simple was the reason why he's a 7-figure trader. So keeping it simple is the only way to do it, because the more you complicate things, the more you're going to get in your head. Traders tend to have analysis through paralysis. They overthink, right? That's why some of these extra super smart, highly educated people cannot be successful traders because they are overthinking, right? They're overthinking everything. They're like, oh, but this needs to happen for that, or this, and I need to see this and that. It's like trading is like painting. It's like it's more of an art, not a science, right? It's more like there's like intuition that comes involved. There's pattern recognition. There's little like flicks of your wrist that you could do with your paintbrush to like start to do things. So I think that a lot of people tend to overthink and overcomplicate, which leads to them ending up losing money. But if you could just keep it very simple, right? So VWAP is a great indicator, the volume weighted average price. The VWAP line basically means what the average price per share that people are holding for the day. If the stock price is above, it's bullish. If the stock price is under, it's bearish. So at least use that as an indicator. If the stock is above VWAP, buy dips. If the stock is under VWAP, short bounces. Short resistance, buy support. Do not buy the breakout. Buying the breakout does not exist in the small cap world, right? It's different for large caps. It's different for certain things. But like for small caps, when you buy the breakout, that's where they end up rejecting because they want all that volume to sell into, right? So keep it simple. Shorter resistance, buy support, use VWAP as the overall indicator. If it's above, it's bullish. If it's under, it's bearish. Keep it simple.
It's interesting you mentioned that in terms of small caps. We've been meaning to ask you actually this whole time. Like, what was it about small caps? Was it something was that the first thing you got into and you just stayed there? Or was it something that over time you thought, this is the market for me?
So a couple things. Number one is that they were very cheap and they were very volatile. So with a small account, I can make big percentage moves on the small prices. Number two is most of these small cap companies are scams. They're highly dilutive, highly sketchy. Most of the time, they put the same press release out 10, 15 times. So for me, I knew that my edge was to the short side. So not only were there big percentage moves to make, but I knew the end game of these stocks. They always, 9 out of 10 times, they end up failing. Question is the timing. Can you get the timing right? If you can, most of the time. I mean, these things are hype vehicles. So they put out a press release. They say that they cured cancer in rats, and the stock is up 300%. Everyone's like, oh my God, if they cured cancer in rats, they're about to cure cancer in humans. But the reality is that like maybe they didn't even do that, right? It could just be BS. It could be fake. And what ends up happening is then those companies go to the big investment banks. They say, look, our stock is up 500%. We want to raise money by issuing shares. When they issue shares, supply of shares increases, which means price goes down. It's supply and demand. More supply, less demand, price changes. So what they end up doing is they end up issuing shares at a highly dilutive rate. Stock ends up coming down, and all of a sudden you don't hear back from them for 5-10 years because they took that money, they bought a private jet, they came to Dubai, right? So I know the end game with these companies, and that's what I stick to. That's my niche. My niche is finding the worst companies in the world and betting that they go lower. So it's actually funny because we started this conversation talking about Warren Buffett. Warren Buffett finds the best companies in the world and bets that they go higher. Yeah. I find the worst companies in the world and bet that they go lower.
I was trying to think of a term for you then. I was trying to think.
I'm an evil short seller is what they call me on Wall Street Bets. But the reality is there's two directions to the market, right?
Yeah.
So if during 2020 and 2021, you were only a long bias trader, 2022, 2023, you lost money. But understanding how both mechanics of the market work, long bias and short bias, during any cycle, you can make money, right? Because if the market's going up, anyone can hit the buy button and look like a genius. But if the market's coming down, like you remember Meta went from $300 to $90, right? That is a huge directional move that you can make a ton of money on the short side. Now it went to 600, so it's different. But if you're just waiting for 2 years, you're losing money for 2 years.
Yeah.
So I encourage traders to learn both sides of the markets. I just found that my personality, based on the way that I trade and my strategy, I make way more money on the short side. But I take that money and I invest it into long-term stocks to the upside.
Yeah.
Right? So it's not just I'm going short forever, is I'm generating...
Your trading is short.
My short-term...
investing.
Correct.
Yeah.
So I'm generating cash through short selling, but I'm taking that cash and investing in Apple, Microsoft, Tesla, indexes because I believe long-term, the good companies are going to go up, but these shitty companies are just going to keep going down.
In terms of that, because even Lance, I remember seeing him on a podcast where he basically said like small caps is the only place that has edge. Like you said, like Forex, no edge.
Definitely not.
Futures, no. He basically said, yeah, small cap stocks is where you can find edge. And I find it fascinating because obviously I know futures traders, I know some Forex traders, I know crypto. I know, thanks to the podcast, I get to meet all kinds of traders. And people get really interested, more the audience side. They get so interested when someone has a very polarizing view, a very definitive view. There was one guy I had on, he was an ex-Goldman Sachs sort of investment banker trader, which is a whole different level. It's a whole different mindset of like how they do
world.
that. Exactly. So like his mindset is scalping cannot work at all. Like there's no way in hell he's never met a profitable scalper. But scalping to him might be like something completely different. Yeah. And I let people obviously have their thoughts, but the people in the comments are like, this guy is just absolutely talking rubbish, doesn't know what he's talking about, obviously must be fake because that's what he said. And I'm like, well, he worked in an investment bank, you know what I mean? So it's like, he's telling his truth. Just like with Lance saying about the small caps, for example, I'm sure there's people who be like, well, Forex this or this and that. The reality is each individual trade. But why do you think that is though? Why do you think, Lance, is that something you share as well? Like you think there's a lot of edge when it comes to small caps?
Yeah, so the edge comes through inefficiencies in the market.
Okay.
So Forex is very efficient, right? There's not too much of a spread. That's why you use high leverage. But for small caps, you don't know when the news comes out if the stock is going to go up 100%, 200%, 300%. It's very inefficient because no one is able to properly value what that news is worth. So with that inefficiency gives opportunity, right? And to go back on scalping, I knew a guy at SMB Capital that was what I call a super scalper, right? So he would take 50,000 shares of like an AMD, make 10 cents, make 5 grand, 5-10 times.
Wow.
So there, I've seen it happen. I knew a guy that would only imbalance trading. So he would wait for market imbalances and trade that. There was guys that would only trade options, right? So there's plenty of ways to skin a cat. And just because I can't do what this guy could do or he can't do what I can do doesn't mean that it doesn't work. It's that it's just you may not be properly educated the right strategy to use in those opportunities. But I've seen all different types of things working. I've seen guys that only trade NVIDIA. They only trade NVIDIA and that's it. And they make 7 figures. I've seen people that only trade crypto and they make money. I've seen people that only trade small caps, only trade long, only trade short, only this, only that. It really just depends.
Have you ever come across anyone though who does a wide variety of things and does them well? Because when I try and think of it, I can't think of anyone.
Not really. Now, I'm sure there's out there. I'm sure there's the diamond in the rough.
The 50 screens.
Yeah, I mean, I'm sure. But the way that I've always thought about trading is how much attention you're able to give on one setup. So for example, let's say I have 100% attention. If I'm trading 5 different stocks, 20%, 20%, 20%, 20%, 20%, my attention is split. I would rather have 100% attention here, focus on the best setup, and try to just zone in on that rather than trying to attack here, trying to attack here, trying to attack here, and trying to attack here. I've seen people do it. They're very, very talented, the people that do it. But for most normal people, it requires a lot of brain power, man. It requires a lot of brain power. And, you know, that's something that maybe I struggle with too, is like I don't eat healthy. I still drink, you know, like, so there's a lot of people that give up a lot of things to be able to be at their tip top peak performance trading
24/7, yeah.
And for me, like, I know my limit. I know that I'm not going to give up pizza and ice cream, right? I know that I'm not going to give up having a nice drink from time to time. Yeah. But that also means that I may be limited to a certain amount of P&L over the long term because maybe I'm not able to wake up as early anymore. Maybe I'm more fatigued throughout the day. So my sacrifice is that I would rather enjoy some of the pleasures of life rather than make a little bit more money trading. You know what I'm saying?
No, 100%. And I heard you say something similar in terms of, you know, trying to emulate the $10 million a year traders, but you realize actually you would be much happier just with what the market's giving you. I think the $1 million, $2 million dollar mark, if I'm not mistaken. But having that life, the lifestyle that is more accustomed to you and what you want out of trading. Because there are people who do that where they get into trading for freedom. They say that in their head.
Correct.
But in reality, they enslave themselves into the markets and the charts. And most of the time, people aren't profitable when they do that, but some people are, right? But then they're equally they're not living. They're making all this money from the charts, but they're not really living. and the quality of life isn't always the best either. So what was that decision though? Like, because obviously, as you already mentioned, there are certain things that you just enjoy. You want to live that life. But has that always been the case where like you got into trading for that freedom as well?
Of course.
And you want to have that freedom?
Most people get into trading for money and freedom. And what ends up happening is, like you said, you become a slave to the market. You become a slave to everything. And what I ended up realizing over time, took me a very long time, is I am working so hard to be able to have that freedom to take a month off for my honeymoon. I'm working so hard to be able to enjoy the pleasures of life. And if I am not doing that, then what the hell is the point of working so hard, right? What is the point of those sleepless nights? What is the point of those tough days? What is the point of all that stress, all that pressure, all that fatigue if you're not enjoying it? So I think that as a trader, it doesn't matter what, you don't have to be a millionaire to start to enjoy it. But, you know, if you have a $5,000 day, a $10,000 day, take out $1,000, take out $2,000, go out for a nice dinner, go get your wife something nice, and just enjoy the fruits of your labor, because the reality is that's why you're doing this in the first place. So I think that if you are not enjoying it, then what the hell is the point?
It's so true. It's so true. And I think traders get so focused on the monetary side, which I get, because like, why would we trade in the first place if we didn't want to make money from it? Of course. But I think it becomes a detriment, because I remember I spoke to someone and they said their passion. I said, are you passionate about the markets, you know, as a whole? No, I'm passionate about money. And I was like, I get it. I do get it. I understand. But it's just like, if you're passionate about the money, what's going to happen early on in your trading journey is you're going to lose money. So that's the completely opposite of your passion of making money, right? Yeah. So what happens then? You're in this thing that you're not really passionate about, but you want the money. But then what it's done is it's taken money from you. That's probably why most people quit, right? If that's their passion. Because I've met a lot of people whose passion is real estate. As you mentioned, like there's two options there was real estate, stock market. For them though, their passion actually is real estate.
Correct.
But they get into the stock market or trading because they're like, oh, that's what I'll use to fund this. And I don't think that, I've not really seen it work properly. Where their true passion is this. That's the thing they actually wanted to do. The only reason they got into this because they think that's a way to fund this, which I mean like trading to fund the real estate. And I think it's just not the right mentality, especially nowadays. I get like before, nowadays there's loads of strategies in real estate where you don't need to have as much money.
Sure.
Like the barrier to entry is much lower. But yeah, I just think like if you are going to be a trader, you have to be passionate about it. What are your thoughts?
If you want to be successful in anything, you need to be passionate, right? Why is Elon Musk doing what he's doing? He's passionate about taking us to Mars, about Tesla. You know, speaking of that, I can't wait to buy an Optimus robot, right?
Oh, I've seen that, yeah.
Yeah.
That shocked me, to be fair, because I always heard of him talking about like worrying about AI.
Yeah.
I remember a good few years ago where he was like, we should not tap into AI.
Yeah.
We should not get into it. We should not get into it. But now he's done Neuralink. He's got the robots. He's fully going all in. I don't know what changed.
I think that it's inevitable, so he would rather be involved.
Yeah, that makes sense. Yeah.
But it's the same thing. Like I was saying, you have to be passionate no matter what you do. It's like even if like someone that's making, I don't know, like these microphones, like they are passionate about what this product is to them, right? Yeah. Most people, or even like watches, right? These are handmade watches. They are passionate about it, right? So for me, I've understood through all the successful people in this world is that money is a byproduct of your passion. Money comes after you fully go all into whatever it is. And for us, it's trading. I love learning about the markets. I love watching, you know, The Big Short, The Wolf of Wall Street, all these Wall Street type of movies because I'm passionate about it. So for me, it's not really even work. It's something that I'm interested in, right? So it becomes very easy to obsess over something that you love. It becomes very easy to obsess over things that make you happy. And for us, it just so happens to be the market. So it's very, very easy. But if your end goal is money, I think it's going to be very, very difficult to persevere through the hard times because losing money is a horrible feeling. Doesn't matter what level you are. Doesn't matter how much you've made. Losing money sucks. But if your passion is the market and getting better, that's what helps you persevere. So I don't think that money is a byproduct of you wanting money. I think money is a byproduct of your passion and perseverance through the hard times.
It's like the reward, right?
It's the reward.
It's the reward of doing the right and correct things. Because it's like the efforts that you make are compounded. I think like always, like let's say if you got into trading and it was 3 years ago, the first 2.5 years, you might not make any money, but all the consistent effort that you hopefully put in to actually get to a point where you make money you get paid for it then, right?
Yep.
So like making 400K in that one trade.
Yep.
That first year where you lost money.
First year I lost money.
More than paid for, right?
Correct. First year I lost money. Second year I broke even. Third year I started to make money. And by making money, I was making $100 a day.
Yeah.
It's not real crazy money, but like it was something. But most people give up after a year because they're like, screw this. It's not really working. But for me, I didn't even think about quitting because I was just so interested. I was so interested about, like, I remember like every single day I would go on YouTube and just try to find videos, try to educate myself, try to just do anything every single day. Not because I felt like it was a job, not because I felt like it was work. For me, it was interesting. For me, I was learning. For me, even to this day, like I said, I'm still trying to learn.
Do you feel like there's a lot of traders out there where, I think we talked about it earlier, to be fair, in terms of that misconception that one day they won't have to put in as much work? Because I realize as well that a lot of people might think that when you reach a level of success, the work can slow down a lot. You know, you reach this amount of net worth or P&L, the work can slow down a lot. I can get a bit more relaxed, you know? So like, for example, you mentioned about your routine. Yes, you may enjoy certain things, but when it comes to your trading, do you still stick to your routine? When it comes to being on the market at a certain time, checking certain stocks or fundamentals that you need to check, recapping what's happened, et cetera, et cetera. Like, what does that look like for you as well?
Yeah, definitely. So let me kind of walk you through my morning routine, right? And just to kind of clarify on what you're saying is, if you don't continue to grow, you'll be left behind.
Yeah.
So the question is, all right, you're a 7-figure trader now, but if you get lazy, are you okay being only a 6-figure trader?
Yeah.
If you're at a 6-figure trader and you get lazy, are you okay being a 5-figure trader? And these are extraordinarily like large amounts of money that we're talking about, right? So like take that with a grain of salt, but like for a trader level, if you go from a guy making $1 million to making only 500,000, that's not good. If you go from 500,000 to 100,000, that's not good. But it all depends on like how much work you're willing to put in. So let me talk about my routine. So I usually wake up these days around like 5 a.m.
You said that so casually.
Yeah, because I used to wake up at 4 a.m. So I got a little bit lazy. My first, I would say 5 years of trading, I was probably up at 4 a.m.
Why?
I just want to have more time to prepare.
Where did you?
New Jersey. So I'm on the Eastern time zone. So I'm on market time. So back then I would wake up at 4 a.m. because I wanted more time to prepare. Now I'm lazy. I wake up at 5 a.m. Wake up at 5 a.m. And I'm going to explain everything in detail so that there's nothing left out. Is first thing I do is I always check my phone. Are the markets gapping up or gapping down? Is there any overnight news? Based on that, I'll have like a little bit of an idea of what's going on. Next thing is I have to have coffee. I cannot function without coffee. I'm like a zombie without coffee. So get my coffee and go to my desk. By that time, it's like 5:10, 5:15 in the morning. So I look up, now that I looked up which indexes are gapping up or gapping down, now I look at individual stocks. What's the highest percentage gainers of the day in the small cap world? Based on that, I kind of narrow it down to the top 10 high percentage gainers. Then I'll look at the news. What is this running on? Is it up on like an FDA news? Is it up on, merger? Is it up on they cured cancer? Is it no news? Or is it a news that they released 2-3 weeks ago? So that narrows it down to maybe like 5 or 6 different stocks. Then what I do is I look at the daily chart. I look to see what is the pattern on the daily chart. What I've found that I make the most money on is the stocks that wick up and wick down the same day. So these are stocks that go up and go down the same day. History tends to repeat itself. So I look for stocks that gap up, gap down, or an overall downtrending stock. If I'm seeing a stock that's maybe doing like a multi-month breakout or whatever, disqualified. So I'm looking for stocks that have downtrends on the daily chart and looking for stocks that tend to give back their gains on day one. And you can see that very clearly by high wick up and wick down on the daily chart. So of those 6 stocks, narrows it down to maybe like 3 or 4. After the 3 or 4, then what I do is I look at the filings. Are they highly dilutive stocks? Are they low float stocks? Do they need money? Do they need cash? Whatever. That narrows it down to maybe 1 or 2. Then what I do is I look at the pre-market chart. What is the pre-market chart doing? Is it a stock that's continuing to make higher lows pre-market, or is it a stock that topped out and is starting to slowly make its way down? I look for the stocks that slowly make its way down. That narrows it down to maybe, let's say 1 or 2, depending on what the setup is. And then I'll draw my support lines. I'll draw my resistance lines, and then wait for the market to open. And then when the market opens, if it hits the resistance line, I short it. If it breaks down, I add to the winner. And depending on what type of setup is, I'll go in heavier or I'll not go heavier. And then by 10:30 a.m., I cut off my trading, walk away, and that's it.
Wow. Yeah. I love it. Step by step. In terms of the filings, for example, what sort of process in terms of length of time do you think that takes for you?
So back in the day, there were not many resources for filing. So I had to go individually throughout each of the filings, look at the 10K, the 10Q, the 424, all these different things. But now there's a company called Dilution Tracker where you sign up and like it does all the work for you.
Really?
So the problem is now that everyone has that edge. So that's the problem, right?
More people have
What's
it
the
now.
barrier to entry? Like $100, right? Let's say whatever it is. Like, so now my edge of understanding company filings is now readily available, which makes it a lot more crowded of a trade. So you can't just rely on the filings and the fundamentals of the stock. That's why I'm looking at the news, the daily chart, the pre-market chart, the everything. I'm trying to paint a picture of the stock. I'm trying to see what is this company. Is it a stock that ran up 2 weeks ago on the same news? Is it a stock that's low on cash? Do we know that they need money desperately? They're gonna do dilution, raise money, the stock price is going to go down. So I'm very process oriented. And some days I go through that entire process and nothing is there.
Fair enough, yeah.
Right? So sometimes I do it. There's 5 stocks that fit that entire process, right? It depends. It really depends on the day. But I can now show up to the market and every day have a repeatable routine that I could follow and make money out of.
What would you do in those scenarios when you have multiple that tick every box?
Yeah, so at that point, I would try even more to narrow it down to like 1 or 2 that I see fit. And what I like to do is I set something called fantasy orders. So like limit orders at certain resistance points. It's like fishing. You cast your line and wait for the fish to hit.
Yeah.
So at that point, if there's multiple stocks moving, I am not really good at multitasking. So I can't focus on 5 different things at the same time. So I'll set some small starter orders at different resistance areas. And if they hit, I'll be involved in the stock because it'll be at my targeted area, and then I'll start to focus on that.
That's great. That's great. Do you ever do like market execution as well? Or is it primarily limit orders?
I primarily use limit orders.
Yeah.
Primarily.
That's what I would prefer as well. That's what I prefer.
Yeah, because
I think
market
it's much
orders, you don't
easier.
know if you're going to get a bad fill. You don't know what's going to happen. There's a little bit of delay.
I think it's more emotional as well.
Yeah, I'd rather wait for the stock to come to me, right? It's same thing. You have a plan. So it's actually something that's very important. When I was at SMB Capital, I was coached by Dr. Brett Steenbarger, who is incredible. And I know you're going to have him on soon, right? So that's going to be really amazing. But
Thanks to you, by the way.
I'm very happy. He's incredible. Shout out Dr. Steenbarger. You're awesome. So we were going through a bunch of stuff, trying to improve my trading and trying to help, because when you have a resource like Dr. Steenbarger and SMB Capital is giving you access to him for free, knowing that he charges thousands and thousands of dollars to other hedge funds or whatever, you got to use it. So one of the big things that was really hurting me is actually 2 things. So I would always get FOMO and I would always get into stocks early. And, I talked to him about it, and my biggest problem was that I would hate missed opportunity. And what he taught me is, rather than being focused on missed opportunity, think about the missed consistency that you have. So if you're missing your consistency by being overly emotional, by missing that opportunity and getting FOMO, your next couple of trades end up getting screwed up. So rather than worrying about, like over trading, FOMO trading, worry about, if you do that, it's going to hurt your future trades. And that's kind of what helped me there. Now, another thing that he talked about is using your body's tells to help you understand if you're in the right trade or not. And let me explain. So do you ever get that feeling where your heart is racing, your head is pounding, you're kind of shaking, you're like a little bit emotional? That is your body's natural reaction telling you that you're not in the right trade. So what that means is this: if you have planned your entry, your exit, your target, and your stop, you have no reason to ever be worried ever. If your body is giving you that feeling, that means that one of those 4 things has not been planned for. If all of those things are planned, you have nothing to worry about. So whenever I'm in a trade and I feel like anxiety, I feel my heart racing, my head sweating, I'm kind of shaking, I know that one of those 4 factors has not been planned for. And that's what he told me. So entry, exit, stop, and target. So long as you have all that, you have nothing to worry about. And if your body is telling you otherwise, you have not planned for that accordingly.
SMB Capital is a topic we nearly didn't touch on. I nearly forgot. I don't know how that's possible, but I'm glad you brought it up. What was that like for you? Like, where were you in your trading career? Because not normally, but from what I know, a lot of people go through like a graduate style scheme where they will go through and do, I think, 1 or 2 years as sort of a junior trader, learning the ropes, learning from the seniors, being in the environment, developing strategies or being given strategies, and then go through that process until they're a senior trainer, managing capital, getting profit split, etc. I think, if I'm not mistaken, was it slightly different for you?
Definitely.
Yeah.
So at SMB Capital, they like to train their traders from the ground up.
Yeah.
Because by training your traders from the ground up, they don't have the bad habits that most other traders do.
Yeah.
Because they learn from the beginning what not to do. Mm-hmm. The hardest thing in trading is unlearning your bad habits, right? So they would rather create traders from scratch to avoid all that. And they do an incredible job at that, right? So for me, it was a little bit different. So I was actually on the Chat with Traders podcast. And when I was on there, I actually got a call from the host, and he said that Mike Bellafiore wanted to, have a chat with me. And at the time, I didn't really know who he was. So we had a small talk. He's like, hey, like, would you be interested in, giving a speech to our traders? We like what you talked about on the podcast. Like, we'd love to see, like, if you could help our traders out or whatever. I was very naive at the time, right? I didn't know who I was talking to. I was like, if you get me a steak dinner, I'll be down. He's like, okay, sure, whatever you want. Like, at that point, I'm like, what, right? I'm so naive, right? I don't even know. I don't know how important this guy really is, right? Mm-hmm. So going to give a speech to the traders there. The video went super, super viral. I think it got like 7 million views, something crazy. And after that, I got a call from him the day after from him and his partner, and they mentioned that they loved what I talked about. They see some potential in me, and would I be interested at trading on their desk? So I was the first trader that was not trained by them to enter the desk. And I was very, very blessed that they sat me next to their highest earning trader. He was, even to this day, he's the best trader that I've ever known, ever seen, ever. And again, back at the time, I was very naive. I didn't understand what that was like, right? Because I'm seeing him make $100,000, $200,000, $300,000 a day, right? And at SMB Capital, the way they do it is you could see what positions other traders are entering. Mm-hmm. So I could see on my screen that he was entering short XYZs, and he was 90% short bias as well.
Really?
He was 90% short bias, but he was incredible. Like, I'm telling you, that what he did better than any other trader that I've ever seen is when he was wrong, he would not think about it. He would market order himself out of it. There's no, I'm waiting to see what happens. I'm waiting to see this. If he was wrong, like this, he would get out. And that was some of the best risk management I've ever seen ever. Wow. And that's why he's able to do the numbers that he was doing, right? So the biggest thing that I regret not doing there is putting myself out there more. My biggest problem was that I was so kind of shy that I didn't try to network as much. I didn't try to learn as much. The environment was very friendly. Everyone was really nice. Everyone was so helpful, but I was just really, I went from trading alone in my home to being in a room full of other traders.
Was that the jump from?
Yeah, I was at home, right? I was at home trading, and then all of a sudden I'm in a room filled with like 50 of some of the best traders out there, right? So I was very nervous. I was very naive. I should have been a lot more willing to put myself out there. So that's something that I struggled with. But overall, it was an incredible experience. Even just being able to see the numbers that these traders were putting up, to see the discipline. Like the trader next to me that was making all that money, he would do a daily report card every single day. Even to this day, I'm sure he's still doing it. A daily report card every single day. Dr. Steenbarger, he would see 2-3 times a week. He was putting in the work, and he's so much so that he deserves it, right? He deserves it. But for me, being in that environment, I learned what it was like to be like a real professional trader, right? They have morning meetings before the market opens, right? The senior traders coach the junior traders. So it's a very great environment. The problem is that it's very difficult as an outsider to join in, because I understand they want to create their own traders. It makes the most sense. And the traders they do create is really, really incredible. But shout out to them. They are an incredible operation there. They're the best out there. They're definitely the best out there.
Do you think it was beneficial as well, just to be able to see other traders and how they're performing? Because obviously at that point you're already profitable anyway. So I was, the usual question is like, did that help you in your journey? Because you got to see other traders and how they're performing, and you knew it was possible then, but by that point you already knew it was possible anyway.
I knew it was possible, but the numbers that they were doing is just crazy.
Do you think that opened your eyes into what was truly possible?
And back then it was pre-pandemic. So I'm sure the numbers that they did after that was just stupid. I've heard stories of people making $3, $4, $5 million on a day on GameStop. Wow. I've heard people making $10 million in a day, and these are the same stocks that I trade, right? So it really opens up your eyes to the opportunities and the possibilities out there. But the reality is that it's competitive. You know, you see everyone's P&L every single day. There's a leaderboard. So let's say I make $50,000 in a day. This motherfucker made $250,000 in a day. So it kind of pisses you off, but also motivates you. But it also gives a competitive edge of I want to be number one on the leaderboard that day, right? And you know, I think that maybe I was number 2 one time, but there's people that make like millions a day.
Yeah.
You know?
It's incredible. Absolutely incredible. And like you said, they're doing great work over there. Hopefully we'll go see them soon. In terms of your sort of biggest advice to traders out there, like you see the space, you're active on social media, so you see kind of what's going on out there. Probably not in some of the darker elements of the industry, but generally, what are your thoughts? You know, what do you think most people are struggling with? What is it that you can really say, like, if people just stopped doing that and really just changed up, they would be more profitable, they would make progress?
Yeah, it's a couple things. Number one is losing money. As simple as that sounds, is traders tend to lose more money than they should. So the number one thing that I would do is set a max loss auto liquidation at your broker level. So what that means is if you hit this number, your broker automatically liquidates you, right? It takes the hands off the button for you and the machine automates it. So the problem is that let's say you make $100 a day. I think you should set your max loss auto liquidation to no more than 2 days worth of trading. So if you make $100 a day, if you're at minus 200, system liquidates you and kicks you out. The problem I see is that people make $100 a day and they lose 2,000. They lose 20 days worth of work. They lose freaking 3 weeks of trading after one losing day. So if you're able to limit your losses, that's number one. Number two is make sure that you're actually learning a strategy that works. A lot of people, they get involved in YouTube, social media, and they're learning strategies that are outdated. They're learning strategies that don't freaking work. And also make sure that the person you are learning from is not only him making money, but the students are making money as well. So I can make money, knock on wood, but it doesn't mean anything if I can't teach anyone that skill. So never judge someone based on their own profits, because number one, in this industry, there's a lot of frauds out there. Make sure there's the broker statements, make sure there's the confirmation, which I love that you're doing now at the podcast, is everyone is broker verified, legitimate people. So that's awesome.
People think it, yeah. That was an interesting...
that's the way to do it. That's the way to do it.
100% is. I think what was interesting about that was I was vocal before that. I didn't start every podcast saying, this is not a verified trader.
Yeah.
It was giving me... I never asked anyone. Simply because on my come up, it was a case where it was like, who was I? You know what I mean? Like, who was I to ask people?
Sure.
I had like 10K subs or whatever. Sure. But then we grew so fast, and it got to a point where it was like, I need to do something, but I should. My worry was, and it was thanks to, one, doing interviews with like you and Louis Borsellino. That New York trip a few months back really opened my eyes, alongside Jack Schwager as well. Because it was like, when I was speaking to Jack, I mentioned these things to him, because I asked him, like, how did you get all these people to give you, proof essentially for your books? And he was like, obviously the first one was people he knew. But after that, that book became so famous, people were just sending it to him. And then that's why like Unknown Market was full of people who weren't essentially famous. So it opened my eyes to thinking like, I can do that. And another reason was I thought that as a retail podcast, like why would any professional sit with me or anyone who's performing at such a high level? So I always just kind of capped myself into this bubble of like, I can only do retail traders and influencers and just do my best to pick the right ones. I always tried to like do verification through like these prop firms, payouts, or from people who live trade. But it's not good enough, if we're at a level now where we want to increase the quality, then we have to do verification.
I'm excited for you because now it's going to bring a whole new level of traders as well, which I'm interested to learn about too.
That's the fun bit. Yeah, that's the fun bit. But as you were saying though, in terms of
so
verified traders,
max loss, auto liquidation, learn from someone that can prove that their methods are repeatable to other people and not just himself. Because there's people that are amazing traders, but not great teachers, right? And if anyone says that trading is easy, you're going to make money overnight, run the other way. I'm telling you, trading is hard. It's going to take time. It may take a year. It may take 2 years. I've seen people make it faster. But the thing is, if you're not willing to dedicate at least a year, maybe even 2 years of taking it seriously, then don't even try. Don't even try. Right?
I love that. To finish up on, it was like the topic we started with, and I think it's the perfect question to ask you as well, as someone who's done it. But equally, I think we're going to see changes moving forward. Obviously, with Trump coming in, the markets will probably have some sort of shift many times, probably in the 4-year period. If he lasts the 4 years, hopefully. Fingers crossed. But yeah, so like changing strategy or changing, like edge changes. What does that look like? Is it the whole entire edge that's changing? Is it just slight adjustments? Like, what are you looking for? How do you make those sort of changes? Any sort of insights that people can just have in mind in case they need to do the same?
Yeah. I think something to understand is the market moves in cycles. There are certain cycles where, stocks are overly bullish. There are certain cycles where stocks are overly bearish. There are certain cycles where stocks pop and drop. There are certain cycles where they end up grinding back. The thing is to understand what type of cycle you're in. And the way to understand that is what is going on that current week in the market, right? So, for example, right now, as we're recording this, the entire market is going straight up, straight up, straight up based on Trump, right? Chances are it's not going to last forever. There has to be a profit-taking day. There has to be consolidation. There has to be everything. So to be in tune with the markets, you'll be able to see when the cycle is adjusting, but also to not be too early on that adjustment, not to say, all right, the profit-taking has to happen. I'm going to do it today. Wait for the confirmation and then join the trend, right? They always say the trend is your friend, right? It's so simple, so simple. But if you anticipate, it's not the way to do it. Wait for the confirmation, wait for the signal, wait for something to tell you. Like PHUN, the signal was the CEO quitting. That was the catalyst. I don't know what the catalyst is going to be for a certain profit-taking day. It might be the Fed, it might be whatever, but wait for some sort of signal to tell you that the cycle is changing rather than just your bias.
Yeah. Do you think that's where a lot of people go wrong? Is they're constantly trying to predict?
And they say that it worked last month. Why isn't it working this month? Let me
That's
just keep
always
doing
the
it.
mistake, isn't it? Like when it works the one time. It's like, let's say you have a rule, don't trade Monday. But then you trade Monday that one time, it works.
Yeah.
And then suddenly you're trading every Monday after that.
Exactly.
And it's not working.
Exactly. So a lot of people are like, oh my God, but like I made $100,000 in January of 2020. Motherfucker, we're not in January 2020 anymore. We're in 2024. The shit is different. It's very different. So they keep that in their head. It's like a syndrome where you're like, but I made this much money in January doing this. I have to just keep doing this to make money. No, that's not how it works. You have to adjust and adapt because that is not working anymore.
I love that. Alex, again, I really appreciate us doing this again for the second time. We're definitely not going to do it a third to redo it.
We're going to do it after the $1 Million Day.
Yes, we will. We will. And hopefully we'll do a roundtable. I know we've talked about that. So I'm very much looking forward to that as well. The links for Alex will be in the description below. So make sure you check them out. And everyone, make sure you hit subscribe, hit like. There'll be other episodes on screen. We are only bringing you, as Alex said, verified traders moving forward. So this will be the spot for that. Hit subscribe, drop a comment with your biggest takeaway from this episode. I know there was so much to take away. And until next time, everyone, take care.